Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It's Thursday, pretty big down day on Wall Street. We walked in today thinking, what type of market do we have? In the last week, there's been a lot of volatility, and actually a little bit better volatility because at least some things have made sense, right? Last Friday, you had a breakout failure outside day that led to another day of selling on Monday. And then on Tuesday, you had a red dog reversal in the bottom of the range. Decent long setup if you did it calculated, trying to be tactical. And then you had follow through yesterday. And then yesterday, they pushed the envelope just a little bit to get everyone feeling a little bit comfortable that maybe it's more than a feeble bounce. And they probably squeezed some shorts that thought, you know, it could be more than a feeble bounce. And then today happened where we walked in and said, what are we going to have? Are we going to have an inside day and digestion and then kind of try and continue to rally? Or do we give back a decent amount of the two-day bounce to negate it and to this time get down to 1840-ish and power through it and ignite further downside? Well, a lot of things transpired in the first 60 to 90 minutes that could have got you out of some leftover longs if you had a third on, or look for a short if you took your day and a half trade yesterday and said, I'm going to wait and see, or just salvage some trades as a lot of those weaker sectors engulfed yesterday in the first 60 minutes. It took a whole day to get the Russell, the bios, high beta tech, technology to close on the highs, and then it took 30 to 60 minutes to negate that right off the bat. That just showed you who had control, and that was the bears. So let's just start going to some charts. Okay, first things first, let's look at, right now I'm putting in the 150-day here of, of the Qs. So let's go with this one first, okay? The Qs, which has been a leading indicator to the downside with the bios, okay, formed this little head and shoulders top, the left shoulder, the head, the right shoulder. We had this in off the charts, gave you a move through the neckline. If you took it, great. A little bit of a retest, boom, and then look at this engulfing action yesterday. I'm sorry, today. Feels like it was a few days. All right, your first, stop. Actually, it did a small red dog reversal here where you had 87.87. Where did it get to today? And it did get there, 87.88. If you were a machine, maybe it calculated, a red dog reversal. If you push through a prior high, you get short. If it comes back below, you were risking a penny, which I doubt any of you did. And look at the size of this move on risking a penny. Anyway, when it couldn't get through, that was your little quick sign. And coming into today, you're like, okay, what's going to happen? Do we hold 87.38? Do we hold and have an inside day? Or do we negate this and get a lot of the same, kind of like what we've been seeing? So what happened is we negated it. So if you were long, you could have got out quickly here, or at least when we broke yesterday's low, 86.43, you had to really run for cover. Now, if you look, 86.43 was yesterday's low. Okay, let's go to the 5-minute. Go to the 5-minute. Okay, 5-minute. So 86.43-ish was broken until a little bit later. It was actually broken at 11 o'clock. So it took an entire day, to go up yesterday. It took actually an hour and a half. But it gave back more than half of yesterday within, the first 30 minutes. Look at that push lower, boom. And then you had a bear flag like this. Did it bounce? No. So if you were still there, this could have been your continuation sell, even if you didn't want to wait till yesterday's low. So some clues real quickly. Let me go to time template. Go to East Coast so you could see a little bit clearer. There you go. Boom. Okay, and then once it broke that, here was yesterday's gap up and big time failure. So now let's go to the bios, another leading indicator. Okay, go to the IBBs. IBB, we talked about it, I actually tweeted it a few times and then got some phone calls from some people I continue to talk to from CNBC, Patty Dom and Sheila, and it seems as if I have a face for radio because everyone likes to quote me, but I don't have time to go on anymore. But anyway, this was your breakdown. And then if you look here at the Russell, the IBB, this too, was it going to have some commitment? Because, if this were to have commitment to yesterday, it had to hold higher. Okay, you had this nice little bottoming little pattern, day and a half move, which is really all you've been getting, day and a half before going lower, and you weren't even getting a day and a half in here. So you had to be on your toes. So 232-ish, 230-ish was a spot to to probably take notice getting below that, which we were in the first 45 minutes. That could have given you clues that the broad market wasn't going to hold up, and especially these names. So if you look at this low here, okay, this is 1, so we'll see it in the 5 minutes so you can see it pronounced. This was where momentum traders would probably get out, and then this is where you had to be very prudent to get out. So let's see, what time did the bios get there? Ooh, look at that. The bios broke the momentum level at 9:45. So you had to be really on your toes. And it didn't even make a new high. It gapped down and just sliced this entire range. And then if you look at yesterday's low, okay, it went to yesterday's low by 10 o'clock. So the bios gave back what took an entire day in 30 minutes. So that was the first thing to give away one of the clues. So, you know, when you're trading fast markets and you don't know exactly what's going on and you're testing levels, you're testing day-and-a-half longs or shorting rallies. A lot of people have been doing the H pattern, and that's been working. I know yesterday they pushed the envelope a little bit more. Lo and behold, you know, you got to be quick and you have to be risk averse because it's a dangerous tape. And I know I'm a trader and I love volatility. Sometimes there's dangerous volatility and you could do less because you could lose a lot if you're wrong. You know, and sometimes there's good volatility where it feels like now they're just pushing the envelope both ways. If you're long, they want to stop you out, and if they're short, like yesterday with the spiders, took it up to 187, so they probably squeezed some guys who thought, oh, maybe this is just going to be like the old same thing, low end of the range to the high end of the range to the low end of the range to the high end of the range. This time, the bears wanted to have control. They would stop it somewhere, you know, after a third bounce or a half bounce, and they brought it to a half. So let's go to the spiders now, or the SPX. SPX, you go to the daily, and you will see that here is this upper channel, right? This was your push through the prior highs, and then this was that red dog reversal, okay, where you guys know this strategy. Some people on Twitter, I'll have to say, come back to me, they say, but you didn't say to sell. You didn't say you were short. Okay, well, that's what the virtual trading floor is for. Okay, I arm you guys with strategies. Everyone knows what a red dog reversal means. When you push through a level, you can't hold that level. You come below, you're looking for a counter trend move. You put on the short, verse that high, and then you hold it as long as you want to go. Okay, we're teaching you the strategies. We're not going to throw fish in your boat every which way, especially if not part of the VTF. I try and do as much as I can for the Twitter world in order to give you guys a plan. And if you're not on the virtual trading floor, you know what? Get my note. My note. It's a one-time charge for the entire year, and I go over levels and I go over thoughts. You can see my disclosures at the bottom. And again, whatever the cost is, it's pretty darn cheap for the year. So I try and connect the dots when I can, but sometimes there's just not enough thumbs. So you have to actually do some work on your own and take some accountability. So anyway, you go back to the chart of the SPX, and you will see that here was that Friday reversal, okay, which could have got you out of some longs if you were trailing longs. And then when we went below Thursday's low, that was some confirmation of weakness. You closed in the lows. If you took it home short, you had your day-and-a-half follow-through. Okay, and then you had this red dog reversal, okay, which some people saw me get long the spiders and Facebook. I was overseas, so I didn't do too much. So nice little move from 1841 all the way to yesterday's close of 1872, 30 handles. Your stop on this was 4 handles. So nice 4-handle risk on this pattern for what turned into 30 handles of picking and choosing when you want to sell. And then what kind of screwed up some traders, which I understand, because you know got me thinking that maybe we hold up too, is we pushed above this area and it closed on the highs. But then today, I was there and it did actually make a new high. 1872, where did we go up? A handle? Oh, a half a handle. I think it was like 5 cents in the spiders, and then broke. And pre-market, in my note, I gave two levels, where I gave the levels, and I also gave it in, I think I gave it, I post a chart every day on Twitter with some thoughts, so you can look at it, because people are like, Red Dog, you're not tweeting as much as you used to. I'm trying to do as much as I can. It's a fast-moving market. So talked about 1862, which was like 186.20. I'm like, if we're going to be strong and have an inside day, 182.40 or 20ish should hold. So that's a level if we start breaking, be careful. And then 185.40. If that were to break, then the bears start growling. And if we close below that, they're definitely going to think that they're going to break this range and we could see more downside. So anyway, you go back to the chart. You'll see this is what we came into, not knowing would we be right back at the upper end of the range, or would we, at this time, from here, it might have been too high to break through this level. From this one, maybe it goes through it, because if they maintain it. So anyway, boom. That was your quick little out right here. And then right around here, I think we said a tweet. I'm like, if you are holding a third of what you had, trying to trail it, use that 60-minute level and just get out of the name, take a small loss on your leftover, and potentially just move on instead of being at the mercy of this move. And if you just held and you sat there, you lost a lot more than you needed to. So now we did close basically at the low end of this channel. The good book would say to be short, and I am short the spiders. I am short a little FXI. It's been a big move, right? Big move from this red dog reversal right here into the gap. Then finally a little bit of an outside day here. So maybe there's some downside to let the 8 and 21 day catch up. I know here you had an outside day, but it meant nothing. Maybe from here it does if the markets deteriorate. And you could have picked and choose anything. I didn't want to get too net short, but I wanted to do the right trade. On the VTF, we were talking, it was like 8, it was like 340, and I'm like, you know what, this could be a bounce here. Let's short the spiders into the bounce if we want to take a momentum move. And we did it together on the VTF, or whoever some people did. I talked about it, and now I'm short. And if we gap up tomorrow because of JP Morgan's earnings, as well as Fargo's earnings, I'll figure it out and see whether or not we're back in the range and they just want to mess with shorts again. But the right trade here is close on the lows below a level. Probably should be a little net short. I know that we came down a lot today, so maybe you need an inside day before breaking lower. Who knows? But at this point, the composure is real negative. I feel like I'm in a bear market in the momentum names, the bio names, the high beta names, and the dislocation is that the S&P is like flat and the Dow is down a little, and it's been messing up traders. So we'll see if everything comes together, if that continues. And I am short a little Tesla, which I hate to be, but to me, you have an engulfing day, and I think that if it were to break this level here, we can get a cute short. So I'd rather have a little, and then if it opens up a little bit here, maybe you get a short for a quick flash down, and then who knows, maybe you get a red dog reversal. But at this point, I wanted to try and grow a little bit here, and this does look weak, and it's now below the moving averages. And if it wants to go lower, it seems like it could get to the 190s or maybe even lower. So I'm getting out of my comfort zone. Again, not a great short. I like to, when the market's weaker, I get out of the way, I stay tactical, I look for little RDRs, and I hope I'm not late starting to try and short rallies a little bit here, but we'll see how it goes. Gotta change. And it's been a tough tape. It's been a very tough tape, and if you're in the wrong frame of mind, what I've told some of my traders that have been a little battered and bruised, because in March there was a lot of batter and bruising before figuring out what the dislocations meant, just try and get green. Try and get a few good days, small days, just green days, and then you'll feel better, and then you'll think clearer, and then you'll put on the trades you used to put on, and then it'll add up and you can get out of your rut. You're not going to make back all your money in 3 days if you're down a month worth of P&L. You're not going to get it back in a day. You have to chip away at it, risk averse, and then figure out how you feel better, and then move on. And then you'll get your type of market at some point, and that will happen, and then you won't be in too big of a hole. And most traders make their money in 3 or 4 months of the year. The trick is just on the other 7 or 8 months not to lose too much, not to pull too much hair out, and not become a shell of yourself if you put too much risk on and you take too big of a hole, because then you're never going to press the buttons. And that's about it. It's Thursday. Tomorrow's Friday. It's been a long week. I'm happy to be back here in my studio after traveling around the world. So actually not around the world, but Central Asia. I've met a lot of like-minded traders out there that work hard looking at technical analysis. We have subscribers, all across the world, and it's great. It's great to talk to individuals who, are very similar, but they're in 16 to 18 hours away by plane. And for those of you who I did see when I in my travels, thanks for the hospitality. Thanks for being so gracious, and I definitely have changed my perception of some things that end in a stan. They're not all the same. And I know one place was Uzbekistan, and it was very nice people and clean streets, safe, and it's been really nice. So anyway, I'm back, and I'm hoping to get into a very solid routine, because I am a creature of habit. I tried to add as much value when I was away by logging in remotely and talking on the VTF and putting on some positions and trading and tweeting, and now I'm back in the saddle, and we'll figure it out together. Don't become a shell of yourself. It's very easy to do. Don't push it when you're not seeing it. cash is a position. Sometimes less is more. And I promise you, small steps lead to firmer ground. Scott Redler, T3 Live, the recap. See you tomorrow morning. Darcy will do the call, but I'll be in NYC on the radio and on the virtual trading floor.